Welcome back to Finance News, the only place you need to go for all of the week's best news from the stock market, business, and investing. Consider this a safe space for all investors, whether you just sold out of all of your portfolio and now buying penny stocks, or if you prefer to buy global index funds every month. No judgment here, so let's get straight into the week's biggest headlines. In yet more excitement from the US Federal Bank, interest rate hikes are on the horizon as inflation continues to put pressure on business and consumer spending. Jerome Powell, the chairman of the bank, addressed the nation this week after the first rate-setting meeting this year. Markets reacted erratically to Powell's comments after his stance remained hawkish, stating that the bank is reducing its support of the economy through quantitative easing, which will taper off in March and lead also to a rate rise of 0.5%. Investors reacted immediately to the sentiment by further selling off popular tech and growth stocks as future cash flows became further discounted and borrowing prices would increase to raise capital. The Fed's actions have been repeatedly tied back to the non-transitory nature of the record levels of inflation seen across the country. In December, inflation reached new highs of 7%, which were led mainly by high energy and gas prices, food costs, and huge prices of trying to buy second-hand cars. On a positive note, even with all the fears around inflation and the Fed tapering, it's been one hell of a week for earnings from some of the world's largest tech companies. Tesla reported its Q4 results, which were a new record for the company, posting a revenue of $17.72 billion compared to estimates of $16.57, and also net income rose to $2.3 billion, which was an increase of 760% from the same quarter 12 months ago. The electric car maker's boss, Elon Musk, states that supply chain issues would be the main limiting factor for the company's growth moving forward, as it did not intend to introduce any new models in 2022, instead focusing on full self-driving capability, which is currently in a beta format rolled out to 60,000 cars across its user base in the United States. As is expected in the current stock market we're in now, investors did not treat the share price well, with the company taking a hit in after-hours trading. As of recording, the share price is sat around $829, a 16% correction from just 5 days ago. In other earnings, tech giant Microsoft reported a beat on both revenue top line and bottom line results. Revenue for the quarter was $51.73 billion compared to expectations of $50.88, and earnings were $2.48 per share versus $2.31. The software giant gained some of its largest increases from its cloud services offering Azure, whilst also showing strong gains across gaming too in its Xbox division. The company will be looking to further bolster revenues and profits in this sector through its recent $70 billion acquisition of gameplay company Activision, as we reported last week. Now, beating all expectations from a busy earnings week, Apple led the way and showed every other company on the planet how to make money. The iPhone maker produced its highest ever revenue number for sales at the record $123 billion, and beat expectations across every product category, including services, Mac, and iPhone, although did miss targets on its popular iPad range. The biggest gainer in percentage terms was from the company's Mac range, which has seen record levels of buying from consumers as the company rolls out its own silicon using the latest Apple M1 chips. Apple CEO Tim Cook highlighted on the earnings call that supply chain issues will still be an issue for the company as it sources legacy chips for their products, but he did say that he expects the situation to improve over the following quarter, as the company is now done with the festive gift-giving period. The share price stands at $159, down as of filming 3% for the last 5 days. You just can't win in this market. Jumping over to Russia, in a strange turn of events, the country's central bank sent shockwaves through the cryptocurrency community this week after it released a report damning the digital currency, citing concerns around illegal activity and risks around financial stability. The country accounts for about 10% of the global mining capacity, so the news led to a brief sell-off whilst prices stabilised. However, in a strange turn of events, Russian authorities have confirmed they are working on a roadmap to legislate the cryptocurrency space rather than an outright ban. Reuters reported on Friday that a working group is looking to find a way forward, including input from the security services and the central bank. Now, why would they want to use an anonymous, decentralized currency that supports illegal activities? It's beyond me. Zooming back to the UK and news closer to home now, the drinks and spirits producer Diageo, famous for brands like Johnnie Walker and Guinness, reported positive half-year results this week. The company reported a 15.8% rise in net sales to £8 billion in the 6 months to the end of December, which was up 20% from the year before. The company also announced that it would be accelerating its share buyback program, which will now be completed by 2023 and will see a total of £4.5 billion returned to shareholders. The dividends-paying giant also announced a further increase in payments, rising payouts by 5%. The share price stands at 3,649p and is down 0.78% over the past 5 days. In the boring banking sector, exciting things are happening. Thanks to the hawkish comments from the Fed in the US, UK-listed banks have seen a rise in their share price as the big lenders welcomed a raise in the base rate of interest. The FTSE 100 was boosted this week just very slightly. Top members of the sector listed here in the UK include HSBC, Barclays and NatWest, who all saw a bump this week, although things have since cooled off slightly as of filming. Value stocks are now officially back in fashion. Or maybe not, who knows. I've got no idea when it comes to the current market we're in. And finally this week, a couple of interesting stories to distract you from the doom and gloom of the markets. Holiday bookings are expected to be high this weekend as travellers get their first paycheck since the Christmas period and look to the hope of a summer getaway. TUI and On the Beach reckon that this will be their busiest period of weekend bookings with popular destinations including Turkey, Dubai and the Greek islands. I'll just stick to Manchester for now because I much prefer the nice ambient background lighting when it's overcast. And before we head over to talk about the latest IPOs from around the world, I always thought that any story about the birds and the bees was meant to be kept quiet and not spoken about in the press. Well, it turns out I was wrong. According to an investigation performed by the AAIB, that's the Air Accident Investigation Branch, 8 passenger planes last year had to abandon their takeoffs due to having been infested by insects. The wasps and bees had found their way into the speed measuring probes over a 3-week period whilst air travel had been dormant. The pesky critters had never travelled so quickly before and probably broke the world record for a speeding bee. Quite annoying for the human passengers though, who were reportedly buzzing about going on holiday. Like and subscribe for more jokes. You won't believe how good they are. On that bombshell, let's look at the biggest public floaters this week. Ooh, IPOs of the week. I wouldn't be doing that in public. LG Energy Solution, a battery supplier to the likes of Tesla, surged on its stock market debut this week as it listed on the South Korean exchange. Shares doubled their listing price, making it the second largest valued company in Korea. The company also supplies battery technology to GM and Volkswagen, along with market leader Tesla, who it is looking to increase supply to across the next few years as demand for electric vehicles around the world soars. The company currently controls 20% of the global battery production market, behind its competitor CATL, Cattle. That would be a great ticker symbol for a cow farming ETF now, wouldn't it? If you like to poke fun, then this next section is always interesting. Let's head over to Fails of the Week. Just when you think it couldn't get any worse, Fails of the Week. In a worrying story, apparently half of the UK's energy supplies are at risk of collapse. That's from reporting in The Telegraph this week. Of the 22 gas and electricity supplies left outside of the largest 6, 12 have negative assets on their balance sheets, according to accountant Price Bailey. This means they're technically insolvent and at risk of collapse, the firm said. Of these, half are deemed maximum risk because of their poor credit scores. We really do have a great system here in the UK, don't we? Such a great public-private partnership, the envy of the world.
And this is a core part of our levelling up agenda.
In another fail, Elon Musk has been trying to take down a Twitter account that tracks the movements, takeoffs and landings of his plane. The Twitter account that goes by the name of ElonJet cleverly tracks data from the FAA and other sources to post the plane's movement, with or without the Tesla's boss feet being on board. Musk has offered the owner of the account, a teenage programmer called Jack Sweeney, $5,000 allegedly, because he views the account as a security risk and doesn't want to be followed around by any nutjobs. I can't blame him. Some people just have way too much time on their hands. Let's now jet over to the house's favourite section, all of the best memes of the week from Reddit's most degenerate place. Sorry, I meant informed stock traders. Welcome to the best of the bets. In this first image, one Redditor managed to carefully break down and analyse where all of Apple's profits really came from. I think we can all relate to this if you've ever stepped inside an Apple store and bought an accessory. Ouch. 2022 has been a hell of a ride so far for investors. I'm definitely seeing less rocket emojis. Who says investing is stressful? It's a lifestyle. As most investors lost money on Netflix as their share price crumbles, isn't it great that our financial system allows some people to profit on the pains of others? This trader turned 6k into 430k betting on some bad results. Bravo. A true story, this one from Twitter. This renter said that he taught his landlord how to trade options, and soon enough, they both became renters. Remember guys, don't follow YouTubers' advice for investing and trading, you'll end up selling your whole portfolio. And finally, when things get rough in the crypto space, once you have to sell everything and call it a day, your friends back at McDonald's will always have you back. You little diamond hander you. As always, thanks for watching, drop me a like if you've enjoyed the video, subscribe for many more, and we'll see you guys in the next finance news. To my fellow diamond handers, happy investing.